keep interest rates low by buying anything it can get its hands on, Treasury notes and bonds, mortgage-backed securities, to forcibly keeping them as low as they've been. Now, many argue that if the Fed stopped that, interest rates wouldn't go much higher. Be that as it may, the market doesn't seem to care. It's been sort of like the wind at its back, sort of the nicotine that it needs to keep going. And the fear is that is ending, or at least changing and slowing soon. All right, we've got Fox Business Network's Charles Payne with us. We've got Gene Marks, the CEO of the Marks Group, keeping track of all of these developments. First off, Charles, to you, and whether anything significant to today, and that interest rates, are still very low, as you and I know, but they do continue to back up.
They do continue to back up. I got to tell you, though, I have a little bit of a different theory. I think the market really wants to see the Fed move out of the way. And I think the stuff we saw today.
Don't tease us, in other words.
Well, A, don't tease us, but B, the stuff we saw today, I don't see how they can move away. Consumers look like they've run out of money. Savings rates are extraordinarily low, and people have not taken a bait. They're not using their credit cards. They go out and they shop and they use debit cards in America. Of course, the Federal Reserve would like them to go ahead and spend money they don't have. The federal government would like them to spend money they don't have. So far, households have been pretty smart about that. Of course, they took a heck of a shellacking, so that was a pretty good learning lesson. You look at that, and then you look at the quality of jobs. We're a part-time nation. Ben Bernanke's not dumb. He understands that if we go down to under 7% unemployment, and it's all part-time jobs, it's all jobs making $14 an hour. The July earnings, average weekly earnings went down month over month.
Yeah, we got a lot of confusing signals. Gene Marks, another signal we got today was from George Soros, the billionaire investor who has followed Carl Icahn apparently and bought shares of Apple. But one thing lost in the sauce is that he has also put a giant put on the S&P 500. In other words, he is betting on stocks going down in this country. Now, that doesn't make him Nostradamus. He has a good investment track record. But what are we to make of that? That some of the smart money is being very selective where it's putting its money.
Yeah, you know what? It's more pessimistic than you think, Neil. I mean, particularly for somebody like me who's out there among clients and business owners that are running their companies. I mean, out on the ground, outside of the New York Stock Exchange, it's a really slow economy. I mean, we're only growing at 1.7%. Demand is really down, and a lot of companies are still struggling.
So why have stocks done so well? Why have stocks done so well? Most of the earnings have beaten expectations. What's going on?
There's a few reasons. You mentioned one. Of course, the Fed's easing has absolutely contributed to that. I mean, think about it this way, Neil. If you've got something to save, are you going to put it in a bank account earning 0.5% interest, or are you going to put it in the market somewhere? The other thing to keep in mind is that, when you look at the headlines at our friends in Europe, the UK, France, and Germany, they are finally, after all these years, recovering and actually starting to grow their economies. So as those markets start to recover, as the fiscal problems that this country is having, the debt ceiling debate has, slow economies going, we're going to see capital move out of the U.S. and maybe go to better markets somewhere else in the world.
They could be bad for us. All right. Another thing, Charles, oil up today, gold up today, silver up today, natural gas up today, a host of commodities up today. Some of these multi-day events. So a lot of people say, uh-oh, inflation? What are you saying?
Well, that is something that has given the Fed a free hand, because officially they said no inflation, although a lot of people watching the show are probably throwing tomatoes at the screen right now because we've seen inflation in real lives. But a lot of it's cyclical, too. I mean, people have made a lot of money in stocks. Okay, I want to go and start to buy things that haven't moved yet. The George Soros put on the market, that might just be a hedge. Really, the bottom line, I think, and I agree with Gene in the sense that there's a whole lot to the rally other than the Fed. The great news is that we've got great American companies that have gigantic tentacles around the world, and people love Harley-Davidsons in Argentina.
And you always tell young people in particular from your fine specials, longer term, you don't follow these gyrations. You stick with something that sounds good, there's good fundamentals, a good story, compelling product. Long term, you stick with it.
These hijinks are Wall Street hijinks. I don't think they're American business hijinks.
Do you agree with that, Gene?
Neil, if I can just add on, a point about inflation, which people kind of keep forgetting, is that the Fed's balance sheet has grown to just an extraordinary level over the past few years because of all the rounds of quantitative easing. There's a bunch of reserves out there for the banks to loan out to their customers, guys like me and other business owners. And you think to yourself, geez, what if our best dreams turn into our worst nightmares? What if our economy actually does grow 2, 3, 4%, right? And banks are going and lending that money out and financing businesses to hire employees or grow a little bit or buy other companies and equipment. If that money supply is not controlled by the Fed raising interest, that's going to be a big problem. So when I hear about there not being Right. When I'm hearing about there not being a risk of inflation, I really do take that with a grain of salt because the Fed has a big challenge to manage that.
Well, there's no doubt that sooner or later that will be a big challenge. We just don't know when, but that will obviously, a $3 trillion balance sheet, that's going to be a big challenge. I agree.
All right. On the upside, gentlemen, I could tell you about a device some manufacturer made today that could forecast exactly when you die. You just wear this thing, it will tell you when you will likely die. I have no idea why that became news today in the middle of a sell-off, but it does put things in perspective.
It certainly does.
I do want to let you know as well, we are going to be following Dell and Nordstrom when both come out with numbers today. The only reason why we're focusing on them, folks, is whether they confirm the news we got out of Cisco, which is laying off 4,000 workers today, and Walmart, which is talking about slowing sales today. So more barometers to come. In the meantime, forget stocks selling off to Congress just, well, taking off, while the debt is too, to the Republican governor telling D.C. to get its heinies back to work. John Kasich is next.
You need a girls' weekend, and you need it now. Ladies, let's go to Vegas. Cute! Waiter, girls' weekend here. Priceline savings without the bidding.
My mantra, always go the